What's the one skill that separates the traders who build fortunes from those who blow up their accounts within months? It's not what most people think. It's not chart reading, it's not indicator mastery, and it's certainly not having the fastest trading platform. Have you ever wondered why so many technically proficient traders still fail to achieve consistent profitability in the markets? The answer lies in a deceptively simple quality: patience. But this isn't just any patience. It's a disciplined, strategic patience that few truly understand until the market has taught them its costly lessons. Has this ever happened to you? You see the market moving, your adrenaline spikes, and suddenly you're entering a trade without a clear plan, just because you feel like you should be doing something. Richard Wyckoff, one of the most brilliant market minds in trading history, discovered this truth through painful experience. In his early trading days, Wyckoff fell into the same trap that ensnares countless traders today, the misconception that activity equals progress. He believed that making money in the markets required constant trading, that every day needed to show a profit, that sitting idle while prices moved was somehow a failure. Stay with me until the end of this video, because what you're about to discover might completely transform your approach to the markets. Wyckoff's journey from frenetic trader to calculated market master reveals the counterintuitive secret that most trading educators won't tell you. The most powerful position you can take is often no position at all. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Think about this for a moment. What if the trades you're not taking are more important than the ones you are? What if your trading edge isn't found in action, but in restraint? The market doesn't reward impatience. It punishes it ruthlessly, transforming hopeful traders into disillusioned ex-traders with devastating efficiency. The greatest fortunes Wyckoff ever made weren't from constant trading, but from strategic waiting. He discovered that true trading mastery comes from waiting for the perfect setup, waiting for market confirmation, waiting until the odds lean so heavily in your favor that resisting action becomes harder than taking it. This disciplined approach to market timing separated him from the masses who treat trading like gambling, hoping that more spins of the wheel will somehow improve their odds. What makes patience so difficult in trading is that it runs contrary to our natural psychological wiring. Our brains are designed for action, for solving problems through movement. The markets, however, reward a different kind of discipline, the discipline of calculated inaction. When the screen is flashing with price movements and your friends are bragging about their latest trades, the ability to sit on your hands until your precise conditions are met becomes not just a skill, but a superpower. Imagine watching a stock for weeks, perhaps months, while others jump in and out, celebrating small wins and lamenting quick losses. Wyckoff understood that beneath the surface, the market was revealing its intentions to those patient enough to observe its true rhythm. While others saw tedious waiting, he recognized the vital preparation phase that would ultimately determine who profited when real opportunity emerged. If you want to master the psychological edge that elite traders rarely discuss, hit that subscribe button. I'm dedicated to sharing these transformative insights that go beyond technical analysis. The hidden truth about market patience reveals itself when you understand what Wyckoff discovered during his transformative journey as a trader. What appears as inactivity to the untrained eye is actually an intense form of preparation, a deliberate mindset shift that separates professionals from amateurs. The market doesn't reward the frantic energy of constant trading. It rewards the calculated restraint of strategic waiting. Behind the scenes of every successful trader's career lies this fundamental revelation: patience isn't passive. It's arguably the most active decision you can make. While everyone else is frantically trying to catch every market movement, the disciplined trader is analyzing, observing, and allowing setups to fully develop before committing capital. This is the psychological battleground where trading careers are made or destroyed. Consider the profound impact this approach had on Wyckoff's trading. By waiting for setups where multiple factors aligned, price, volume, market structure, he positioned himself to capture substantial moves while minimizing risk. His edge wasn't found in some secret indicator or mysterious pattern. It was in his willingness to do what others couldn't, nothing, until conditions were ideal. This patience becomes a powerful form of preparation. The quiet hours spent studying charts, observing price action, and analyzing volume patterns create a mental framework that allows you to recognize genuine opportunity amid market noise. You're not just waiting, you're building the necessary perspective to act decisively when others are paralyzed by confusion or driven by fear. Most traders develop what Wyckoff called itchy fingers, that compelling urge to place trades simply to feel engaged with the market. This impulse represents the greatest saboteur of trading accounts. The market's natural rhythm includes extended periods of consolidation and unclear direction. During these times, the amateur continues forcing trades while the professional recognizes the wisdom in preservation. The market has a remarkable ability to test your emotional resilience. It will tempt you with small movements, false breakouts, and apparent opportunities that disappear as quickly as they formed. These are not random occurrences, but necessary components of price discovery. Understanding this deeper structure transforms how you perceive market activity and consequently how you make decisions. When Wyckoff waited for his setups, he wasn't merely preserving capital, he was accumulating mental energy. This energy, this coiled spring of focus and conviction, allowed him to act with absolute clarity when genuine opportunities emerged. The psychological advantage gained from this approach creates a virtuous cycle. Patience leads to better entries lead to better results, and better results reinforce the value of patience. Now I want to go even deeper into this topic by examining how Wyckoff's approach to market timing fundamentally differs from conventional trading wisdom. He recognized a pattern that plays out in markets across all time frames, a pattern that exposes the vulnerability of impatient traders and creates opportunity for those who understand the true nature of market movements. If this concept of strategic patience resonates with your trading experience, write in the comments. Patience is my edge. The market possesses a unique transformative power that few other arenas in life can match. It strips away pretense, exposes weaknesses, and reveals character with brutal efficiency. Wyckoff recognized this fundamental truth. No matter how sophisticated your analysis or how confident your prediction, the market remains the ultimate authority. This realization isn't merely financial wisdom, it's a profound life lesson about respecting forces greater than ourselves. Consider the revelation that comes when a trader first truly accepts this reality. The impatient trader stands before the market's immense power like someone facing a massive tidal wave, convinced they can somehow control it with inadequate tools. They fight against the current, exhausting themselves while accomplishing little. The patient trader, having experienced this futility, adopts a completely different mindset. They align themselves with market forces rather than opposing them, moving only when conditions support their journey. This perspective shift represents one of the most significant breakthroughs in a trader's development. Behind closed doors, Wyckoff would sometimes sit in his office for weeks, even months, without placing a single trade. To outside observers, particularly his clerks, this behavior seemed strange, perhaps even concerning. Had he lost interest? Had he given up? The reality couldn't have been more different. During these periods of apparent inactivity, Wyckoff was engaged in the most intensive work of all, deeply studying market behavior, accumulating insights, and waiting with disciplined focus. What's fascinating about this approach is how it contradicts our cultural programming about productivity and success. We're conditioned to equate constant activity with progress, to feel that every moment must be filled with visible action. Yet Wyckoff discovered the profound paradox at the heart of market mastery. Sometimes the most productive thing you can do is nothing. This counterintuitive wisdom applies far beyond trading. It touches on fundamental truths about human effectiveness in any complex environment. The coiled spring metaphor perfectly captures this dynamic. When a spring is compressed, it appears motionless, but it's actually storing tremendous potential energy. Similarly, the patient trader in observation mode isn't passive. They're accumulating intellectual and emotional energy, preparing for decisive action. This state of readiness allows them to move with extraordinary precision and conviction when genuine opportunity emerges. Consider how rare this capacity is in today's hyperactive market environment. While most traders constantly react to every market fluctuation, burning through both capital and psychological resources, the disciplined practitioner of Wyckoff's approach conserves energy. They engage only when the highest probability setups appear, bringing concentrated focus and resources to these select opportunities. This approach isn't merely about preserving capital, though that's certainly a benefit. It's about developing a relationship with uncertainty that few ever master. The market, like life itself, unfolds according to its own rhythm. Learning to harmonize with this rhythm, rather than imposing our desires upon it, represents a profound shift in consciousness, from resistance to acceptance, from control to influence. Let's explore how this patient approach manifests in actual trading decisions and how specific market structures create the ideal conditions for the disciplined trader to finally unleash their compressed energy. The contrast between reactive trading and strategic patience becomes most apparent during periods of market transition. If you've experienced that moment of clarity when sitting on your hands saved you from a poor trade, type "Patience protected me" in the comments below. Market psychology reveals a fascinating pattern that affects traders across all experience levels. The insidious way boredom gradually erodes trading discipline. This subtle influence operates beneath conscious awareness, quietly compromising even the most carefully constructed trading plans. What begins as a momentary restlessness transforms into a persistent discomfort with inactivity, ultimately leading to a dangerous compromise of standards. The hidden revelation that Wyckoff discovered was how this process unfolds. When no obvious opportunities present themselves, traders begin to experience a peculiar form of psychological pressure. The screens feel empty, the time passes slowly, and a nagging voice emerges, "Shouldn't I be doing something?" This discomfort with inaction creates a mental environment where previously unacceptable setups suddenly appear good enough. What's particularly deceptive about this journey is how we justify these compromised decisions. Rather than acknowledging the true motivation, boredom and impatience, traders develop elaborate rationalizations. They call it trader's intuition, or reading between the lines, or sensing market sentiment. These fancy labels disguise what's really happening, the gradual abandonment of objective criteria in favor of activity for its own sake. This pattern reveals a profound truth about the psychology of decision-making. Our minds are remarkably skilled at creating narratives that justify what we want to do rather than what we should do. The disciplined trader develops an acute awareness of this tendency, recognizing when intuition is actually impatience, wearing a sophisticated disguise. The enlightening perspective Wyckoff offers is that patience isn't merely a trading virtue, it's the foundation of genuine market control. This represents a paradigm shift in how we understand trading psychology. Most traders believe control comes from action, from pulling triggers, making decisions, and being in positions. The seasoned professional understands that true control emerges from restraint, from the capacity to remain composed while others succumb to emotional impulses. This control manifests in three critical dimensions. First, control over fear, the anxiety that drives premature exits from winning, positions, or panic selling during temporary drawdowns. Second, control over greed, the impulse that pushes traders to oversize positions or chase entries after missing initial opportunities. Third, control over the need for constant validation, the desire to be proven right immediately rather than allowing trades time to develop. The profound insight at work here is that trading mastery isn't primarily about market knowledge, it's about self-knowledge. Every price movement, every sudden reversal, every extended consolidation serves as a mirror, reflecting your psychological tendencies back to you with unforgiving clarity. The market doesn't just test your strategy, it tests your character, your emotional regulation, and your capacity for disciplined action. Subscribe to join our community of disciplined traders who understand that patience isn't just a virtue, it's the foundation of consistent profitability in any market condition. Consider how this perspective transforms the experience of sitting through market volatility. What appears as chaotic price action to the novice becomes a carefully orchestrated psychological test to the experienced eye. Each sharp move challenges your conviction. Each extended period of chop tests your patience. The capacity to maintain composure through these challenges represents the ultimate trading edge. Let's examine how this patient approach translates into practical trading decisions during specific market conditions, and how Wyckoff's methodology provides concrete frameworks for identifying genuine opportunities amid market noise. If you've noticed yourself lowering your standards when bored with the market, type "Awareness is my first defense" in the comments. Wyckoff's approach comes alive through the stories that shaped his trading journey. One particularly illuminating example occurred when he observed a major company's stock building what he recognized as a strong base pattern. This real-world case study reveals the profound transformation that patience brings to trading results. While other traders jumped in prematurely, experiencing the emotional roller coaster of false breakouts and shakeouts, Wyckoff maintained his discipline, observing the unfolding price action with detached curiosity. What's remarkable about this experience was the clarity it brought to his decision-making process. Behind the scenes, he watched as impatient traders repeatedly bought what they believed were breakouts, only to be stopped out when the stock pulled back into its consolidation zone. These premature entries weren't random. They represented the market's systematic process of testing supply and demand before genuine directional movement could begin. The revelation came when, after weeks of this base-building process, Wyckoff noticed a critical shift in market dynamics. Volume, which had been relatively muted during consolidation, suddenly exploded as price approached the resistance level. This wasn't just any increase, it represented institutional commitment, the footprints of smart money positioning before a significant move. When the stock finally broke through resistance with conviction, Wyckoff entered with his full position size, capturing the substantial move that followed. This pattern demonstrates a fundamental truth about market psychology. The most profitable moves often come after periods of prolonged consolidation. The market uses these periods to exhaust emotional traders, shaking out the impatient before rewarding those who understand its rhythm. The financial impact of this patient approach was substantial. Wyckoff's single position generated more profit than dozens of smaller, more frequent trades would have produced. Now, understanding this principle leads us to a crucial insight. Patience without structure is merely inaction. This represents the decisive factor that separates successful patience from frustrating hesitation. You cannot effectively wait for something if you haven't clearly defined what you're waiting for. The psychological breakthrough comes when you establish precise conditions that must be met before you commit capital. Consider the mindset shift this creates. Rather than asking, "Should I enter this trade?" the disciplined trader asks, "Does this situation meet my predetermined criteria?" This structured approach removes emotional decision-making from the equation. Your trading plan becomes a filter through which market noise is separated from genuine opportunity. Wyckoff's methodology provides several frameworks for creating this structure. He identified specific conditions: a break of significant structure, the test of an order block, the retest of a key level after breakout, that signaled high probability opportunities. These weren't arbitrary patterns, but representations of institutional activity and market psychology in action. The implementation of this structured patience creates an unexpected benefit: emotional stability. When you know exactly what you're looking for, the anxiety of missed opportunities diminishes. You recognize that trades that don't meet your criteria aren't truly your trades. They belong to traders with different methodologies and risk parameters. This clarity eliminates the nagging fear of missing out that drives so many impulsive decisions. Let's explore how this structured patience applies to specific market conditions and how you can develop your own set of criteria that align with your trading personality and objectives. The beauty of Wyckoff's approach is that it can be adapted to various markets and time frames while maintaining its core principles. If you've experienced the power of waiting for your specific setup conditions to align perfectly before entering a trade, type "structure guides my patience" in the comments. The transformative journey of trading patience extends far beyond the entry point. It reveals itself most dramatically in how we manage trades already in motion. This creates a fascinating paradox that many traders never fully resolve. They master the discipline required to wait for perfect entries, only to sabotage themselves with impatience once in position. This psychological contradiction offers profound insights into the nature of risk, reward, and human decision-making under uncertainty. Consider the revealing pattern that emerges in trading accounts: the frequency of small gains compared to substantial ones. Behind this distribution lies a powerful emotional dynamic: the fear-driven impulse to secure profits quickly. This mindset creates a peculiar form of self-sabotage. The moment a trade moves into profitable territory, an internal alarm sounds. Lock in this gain before it disappears. This fear response, while natural, directly contradicts the mathematical reality of successful trading. Wyckoff recognized this revelation early in his career. The psychological breakthrough came when he understood that impatience in exiting profitable positions was just as destructive as impatience in entering them. The small profit taken prematurely often represents the tuition payment that precedes the substantial move you were positioned to capture. This premature exit typically occurs precisely when your analysis is being validated, the exact moment when patience should be exercised most strongly. The mindset shift required here is substantial. Rather than seeing profit-taking as securing gains, the disciplined trader recognizes that exiting positions requires the same structured approach as entering them. Your exit criteria should be based on technical developments, not emotional responses to profit or loss. This perspective transforms how you experience the natural volatility within a trade, from anxiety-producing noise to expected market behavior. Now, we encounter a critical distinction that separates master traders from everyone else: the fine line between patience and stubbornness. This boundary isn't always immediately visible, which creates a dangerous zone where trading accounts are vulnerable to substantial damage. The outward appearance of both traits can look identical, holding positions while the market moves against you, but the internal foundation couldn't be more different. The enlightening perspective Wyckoff offers is that patience is rooted in evidence and plan, while stubbornness is fueled by hope and ego. Patient traders maintain positions because market evidence continues to support their thesis. Stubborn traders hold positions despite mounting evidence against them. This distinction represents the razor's edge on which trading success balances. Hope emerges as perhaps the deadliest emotion in a trader's psychological landscape. It creates a particularly destructive form of self-deception, the belief that the market will eventually validate your position if you just hold on long enough. Unlike patience, which is active and analytical, hope is passive and emotional. It makes you ignore invalidating evidence, rationalize mounting losses, and cling to positions that no longer meet your criteria. The journey toward mastering this distinction requires brutal self-honesty. Each time you find yourself holding a losing position, the essential question becomes, am I waiting because my analysis remains valid, or am I hoping for a miracle recovery? This internal dialogue reveals whether you're exercising patience or succumbing to stubbornness. Let's examine how this distinction manifests in practical market scenarios and how Wyckoff's methodology provides specific frameworks for maintaining the discipline to exit both winning and losing positions at the appropriate time. If you've caught yourself holding a losing trade out of hope rather than analysis, type "honesty before hope" in the comments. One of the most profound revelations in Wyckoff's trading journey was his recognition of the market's natural rhythms. Much like the changing seasons in nature, financial markets move through distinct phases: accumulation, markup, distribution, and decline. This cyclical pattern creates a fundamental truth that many traders struggle to accept. There are times when the market simply isn't offering high-probability opportunities aligned with your strategy. This insight transforms how you approach trading activity entirely. The breakthrough mindset shift comes when you truly internalize that markets have moods, periods of clarity and confusion, trending and chopping, expansion and contraction. These aren't random fluctuations, but natural expressions of collective psychology playing out through price. Just as you wouldn't plant seeds in winter expecting immediate growth, you can't force profitable trades during unfavorable market conditions. This natural rhythm demands respect, not resistance. What's particularly enlightening about Wyckoff's approach is how he reframed the concept of standing aside. Most traders view non-participation as failure, a missed opportunity or lack of skill. Wyckoff recognized it as a legitimate trading position with its own strategic value. When market conditions become uncertain or unfavorable to your methodology, choosing not to participate isn't passivity, it's active capital preservation. Consider the profound mathematical reality this creates. When you stand aside, you lose nothing but time. When you force trades in unfavorable conditions, you lose both capital and psychological resilience. This asymmetric equation makes patience not just virtuous, but mathematically advantageous. The journey toward trading mastery includes learning which market conditions favor your specific approach and having the discipline to engage only during those periods. Behind the scenes of successful trading careers lies a counterintuitive revelation. The best traders Wyckoff encountered shared a remarkable comfort with doing nothing. They could observe market action for hours, days, even weeks without feeling compelled to place a single trade if their specific conditions weren't met. This capacity represents a rare form of psychological mastery in a world that equates activity with productivity and stillness with stagnation. This comfort with inaction directly contradicts our cultural programming. From early childhood, we're taught that success comes through constant effort and visible action. Yet in trading, this conventional wisdom becomes a liability rather than an asset. The transformation occurs when you recognize that trading prowess isn't measured by frequency, but by precision, not by how often you trade, but by how selectively you engage. What's particularly fascinating about this approach is how it shifts the foundation of trading decisions. Rather than attempting to predict market direction, an endeavor fraught with psychological pitfalls, these traders focused on recognizing specific conditions. They weren't trying to outsmart the market. They were waiting for the market to reveal its intentions through price action, volume, and structural developments. This pattern recognition replaced prediction as the core decision-making framework. The psychological journey required to develop this comfort with inaction is substantial. It demands confronting the ego's need for constant validation, the fear of missing opportunities, and the societal pressure to demonstrate visible activity. Yet this discomfort represents the gateway to a higher level of trading performance, one where conviction emerges not from hope but from patience rewarded by ideal conditions. Let's explore how this comfort with inaction translates to specific market scenarios and how developing your own set of recognizable conditions creates the foundation for selective, high-conviction trading. If you've experienced the strange relief that comes from choosing not to trade during uncertain market conditions, type "cash is a position" in the comments. The journey toward true trading mastery requires a profound realization. Your greatest opponent isn't the market, it's yourself. This internal battleground represents the most challenging aspect of developing patience as a trader. Beneath every impulsive trade, every abandoned plan, every moment of frustration lies a complex web of emotions driving decisions in ways we rarely recognize consciously. The transformation begins when you acknowledge this hidden influence. What's revealing about Wyckoff's approach is how he identified the specific emotional drivers behind impatient trading. Fear emerges as the primary catalyst, not just any fear, but three distinct varieties that create a powerful psychological current pushing us toward action when patience would serve better. First, the fear of missing opportunity, that nagging anxiety that the market is moving without you. Second, the fear of being wrong, the ego's resistance to acknowledging misjudgments. Third, the fear of being left behind, the social pressure of comparing results with others. The breakthrough comes when you develop the awareness to recognize these emotional currents as they arise in real time. This mindfulness creates a crucial space between impulse and action, a moment where you can challenge the internal voice, urging immediate trading. Wyckoff developed a simple yet powerful question that served as his emotional circuit breaker. Is this my setup, or is this my ego? This single moment of self-inquiry has saved countless traders from impulsive decisions that would have damaged both their accounts and their confidence. Behind the scenes of emotional mastery lies a systematic practice of observing your own responses to market movements. When you feel that surge of excitement or anxiety as prices move, pause to identify which fear is driving your impulse. This recognition alone often diminishes the emotion's power, creating the mental clarity necessary for disciplined decision-making. The journey isn't about eliminating emotions, it's about preventing them from hijacking your trading plan. What's particularly enlightening about Wyckoff's trading journey is his discovery about the true distribution of profits. After years of meticulous record-keeping and reflection, he reached a startling conclusion. Every significant fortune he built came from just one or two exceptional trades each year. This revelation completely reframes how we should approach market engagement. Out of hundreds of trading days, only a handful truly determined his annual performance. Yet these pivotal opportunities required constant preparation to recognize and execute with conviction. This insight creates a radical perspective shift. Most trading days simply don't matter. The daily noise, the minor fluctuations, the seemingly important news, most of it is ultimately irrelevant to your long-term success. What matters is being completely prepared for those rare moments when exceptional opportunity aligns with your specific methodology. The disciplined trader spends countless hours studying, observing, and waiting precisely to be ready when these critical junctures appear. The most profound realization in Wyckoff's approach is that your biggest edge isn't found in your trading strategy itself, but in your ability to wait for ideal conditions for that strategy to work. The perfect entry system means nothing without the patience to apply it only when appropriate. The most sophisticated exit methodology is worthless if emotional responses override it. Your capacity to align with market rhythm, to engage only when conditions favor your approach, ultimately determines your results far more than the specific indicators or patterns you employ. Let's explore how this principle of alignment manifests in specific market scenarios, and how developing a systematic process for emotional awareness creates the foundation for truly patient trading. If you've discovered that your most profitable trades came from waiting for perfect conditions rather than forcing action, type "Alignment is everything" in the comments. The wisdom Wyckoff discovered through decades of market observation still resonates today because it speaks to something timeless about both markets and human nature. Patience truly is the hidden edge that separates consistent professionals from struggling amateurs. It's not flashy, it's not exciting, but it's incredibly powerful when developed with intention and structure. I share these insights because I've walked this same path, fighting against my own impatience, learning to sit through market noise, discovering the transformative power of waiting for perfect setups. This journey of developing trading patience isn't just about improving results. It's about developing a relationship with uncertainty that serves you in every area of life. If this conversation has resonated with your own trading experience, I'd love to hear about it. Type "Patience transformed my trading" in the comments if you've made it to the end and found value in these insights. Your experiences might help others who are currently struggling with the very challenges we've discussed. If you found this perspective helpful, consider subscribing to join our community of traders focused on psychological mastery as much as technical analysis. Each week we explore another dimension of the mental game that ultimately determines trading success. Before you go, let me know you're with me on this journey by leaving a like on this video. It helps others discover these ideas that rarely get discussed in mainstream trading education. Speaking of psychological edges, there's a video right here about how Wyckoff identified institutional manipulation in markets and used it to his advantage instead of being victimized by it. Click and join me there to continue building your complete trading mindset, the kind that leads to consistent results in any market environment.